Hi, welcome to the Market Alert for Thursday, the 30th of May 2019. So we're nearly at the end of May, and the sell in May go away seems to be continuing. Yesterday, stocks slammed as credit cracks, retail routed, yield curve craters. So we're seeing the yield curve continue to the downside, and the stock market moving lower once more. So let's just have a look at this in a bit more detail and move over to the Dow. You can see yesterday the market moving lower, staying below the 200 bar moving average. However, the market came off the lows yesterday before the close. As you will see as we look in more detail here, you can see the initial move down. The market was fairly quiet in the pre-market session there, and then market heading down. We started off lower. They brought the market back, causing a losing trade here. Then the market came back, retraced, and then moved lower, and then again another loser there as the market was down in the lows. Managed to find some support, and they brought it back, and then we had a move to the downside there to recoup, and then we had the plunge protection team come in and move the market back to the upside there. And you can see once more how the market came off the 200 bar moving average, down about 75 points there, and then eventually it has broken above it there and is moving to the upside. It needs to take out the DP level to move to the upside and head back towards the 200 bar moving average. Just a case of whether it has the momentum to do this or not. So let's just have a look here. What we want to do is to certainly mark up the low of yesterday's price bar, just to see if the market can hold at this level. The 25,214 was taken out. Also, the 25,000 level is very important as well. This was spoken a lot of yesterday about this level. So the market currently holding at 25,133, I think it is, somewhere in that region. So it needs to get back above this support here. Let me just cancel that. We're drawing them all over the chart otherwise, and reactivate. So yeah, this low here was taken out also, but we know from past repetition that when the market comes off the lows before the close, and this was the plunge protection team, by the way, and they bring the market back, it's likely to move to the upside, which is what we're seeing now with this close above the 200 bar moving average. The first clue that it isn't going to hold is going to be a close back below the 200 bar moving average there. But at the moment, it's looking like it's going to make some sort of attempt to try and bounce off the lows here. But May certainly has been a down month. The old adage, sell in May, go away. The yield curve continues to move low, and I can't really report on that. I'm actually looking for a chart that has an up-to-date daily recording of the yield curve inversion, which I will find, and that will make it easier to see how this is actually unfolding. But certainly a risk in the bond markets at the moment. The bond markets are rallying and the yields are being crushed. So again, let's just keep an eye on this. Meanwhile, with the implied volatility, this up only slightly yesterday, 1655. Not major by any means, so it's still got a lot to go to the upside if the market does start to break down. And speaking of other issues, Deutsche Bank yesterday broke the $7 level, showing there at a close of 692, but yesterday's low, as we see there, was 682. Remember that Charles Nenner talks about the 640. Let's see what happens when we get to this level. I can't say that there's going to be financial apocalypse if this is the case, but it'll be interesting to see why he's chosen 640. So we'll keep an eye on this one going forward. But certainly broken the $7 range down at 692 at the moment for this one. And then in the pound, not a lot happening. Down, of course, as more and more come forward for the prospect of taking over May's job. God knows why anybody would want it, but there you go. And now you see the market lower yesterday. The 200 bar moving average, once more we get the upthrust on high volume. The market moves lower. There's something really magical about this 200 bar moving average, and I am making inroads into looking at how we can incorporate this into a trading signal. Today, what have we got news-wise? There's only the prelim. It's holidays in Germany and France. So no news coming out of there. But as I said before, the news really has taken a back seat whilst Trump tweets and the dispute in the UK with the Westminster mob. So yeah, the yield curve is the thing to be looking at the moment to see how that's panning out. And then finally, Bitcoin market managing to rally off the lows yesterday, and looks like it could be heading back towards the highs. So what I would be keen to do here is to mark up 76% from this high to this low and see if the market will drive through here. So yeah, it's not selling off at the moment at all, looking very comfortable indeed, which you can see there. So driving back to the upside to the 200 bar moving average, coming through there, but then going back. We've got a 76% retracement there, and then the market trying again, and then eventually you can see how it's like a magnet, and eventually it blows through, but then we see them buy back and then move the market back to the upside again once we get through the 200 bar moving average. The market is now moving back to the upside, and the market currently is at yesterday's high there. So yes, interesting things going on at the moment. The cryptos aren't selling off. The pound isn't selling off either, which is quite remarkable given the instability down in Westminster. And the Dow obviously under great pressure. And while I'm thinking about it as well, I forgot to mention this the other day, two bits of news that Powell has come out and said that the Federal Reserve isn't going to bail out any more bank failures, which spooked the markets the other day. I missed that one. That was in the Daily Telegraph. And also the head of the plunge protection team has resigned. Okay, I thought I'd find the article for you. Here it is. The head of the plunge protection team is quitting. He hasn't quite gone yet. I thought he had. And there's an article here talking about what he has done as far as QE is concerned and how he moved the market up. And you can see here, I've spoken about this many times in the market alert, where they were selling the VIX futures contract to drive the stock market to the upside, showing no risk. And I mean, this is a glaring proof of what he got up to, and this continued all the way through to the highs that we saw in October of last year. So good article there confirming the so-called conspiracy theory that I've had for many years. Eventually they all come out, and just shows how manipulated things are, and eventually all is revealed there, and what can't speak can't lie. But anyway, Potter, I think is his name, isn't it? Let's just have a look. Let's have a look. Yeah, Simon Potter has made an announcement to say he's off. So he's the one that you see doing this in an evening, or giving the authority for the crushing of the futures, which then sends that's the VIX futures, which then sends the market higher, and that's why we've had that pattern for so many years. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.